Okay, so this is the 2023 published account question. So my method of doing the published accounts are to write out the skeletons. So from turnover down to profit carried forward, and then the balance sheet is a standard balance sheet. But what makes them different, say, from your company accounts or club accounts is we group everything together. So we don't write in buildings and vehicles and so on. We just give a heading for tangible fixed assets, and it's the same for a few of the other ones. So uh, the ones that are grouped together are always the same. So from our profit and loss account, the cost of sales is grouped together. Distribution, administration, and other operating incomes are grouped together. Um, and on our balance sheet, we've intangible, tangible. The two of them are grouped together. Uh, Debtors will be a grouping. Um, Taxation and other creditors will be groupings. So on a workings page or on a separate page, I'll make a sort of a table for each of those that I can slot everything in for, and each of those become a conglomerate of a number of numbers. Now, as the question goes down, I'll write in the words as well as the numbers. You don't have to do that in an exam. You just have to put in the numbers. So I just start at the top, work my way from buildings at cost down through the workings, and put them in as well. The only exception to that is with the buildings, the very first one, you're given this as 750,000. Now, every year buildings are revalued. So if we look in the first or second working, it'll tell us the company is revaluing the buildings to 930,000. So that's the number we're going to put into our answer. And we know from other questions when we revalue, we have to move the depreciation and accumulated depreciation into a revaluation reserve, and I'll show you that as we go as well. So from the start, as we said, buildings, ignore the 750,000 and we'll put in the number that's here, the 930,000. Now, buildings are a tangible fixed asset. So we put that in, 930,000. So after that, again, just continue down. The accumulated depreciation will go in the revaluation reserve. So that 60,000 just pops in there. Vehicles at cost is a tangible fixed asset. Now again, you don't have to write the words in your exams. So vehicles 510, just pop it in. It's like a jigsaw. The accumulated depreciation. So in a balance sheet, accumulated depreciation would normally go in the middle column, and we take that depreciation away from our cost. So in this, we do the same. We're going to take the accumulated depreciation away. So the accumulated depreciation on the vehicles is 204. So we're going to take that away. Okay. So next one after that is 3% investments. Now, investments are a fixed asset. They're a financial fixed asset. So I'm going to just pop that number straight in, 300,000. Now, 3% investments, and you purchase them on the 1st of the 2nd, 2022. So you don't have them for a full year. So we've got investments. Anytime you have investments, you have investment income. So this is one of only two workings. So I'm going to work out what the investment income is. So it's 3% of the 300,000. We got the investments on the 1st of the 2nd. So you have them for 11 months. So we're going to multiply that by 11 twelfths. So we'll do that sum, and that's your investment income, 8250. Okay. So that 8250, there's a spot for investment income in your answer. Everything goes in one column here, so that 8250 can just go straight in there. Okay. Now, the investment, anytime you have investment income, you have investment income due. So we have received, if we go up and check here, this is the only working we'll have, or one of only two. We've received €7,000. So that's the amount we've received. So we're due to get 1250. So we know normally in a balance sheet that investment income due is a current asset, and that will go into the current assets there. So it's not stock and it's not bank, so it has to be a debtor. It's money that's owed to us. So we're going to put that 1250 into our debtors sum there as our investment income due. Okay, so we can move on from the investments, and the next one we see is debtors. Now, um, debtors is going in obviously into debtors, so 291. Just bear with me for 1 second or something going on. Sorry, something overboiling in the kitchen there. So the debtors can go in a 291 into the debtors column. Next one we see is creditors 356. So we know creditors is a current liability. They mean by creditors trade creditors. So we can just pop that straight in. It's not one that we have to combine with anything. So stock is 95,000. So stock will go in the top of our trading profit and loss account. So normally we've sales, then cost of sales, opening stock. So this is our opening stock. So we know opening stock is part of cost of sales. So we're going to put that in. So the opening stock is 69,000. And then patents, and we learned in other questions that patents is a intangible. So I don't know why I have intangible up here, but I do. So I'll just put my patents in there. So my patents are 95,000. Administration expenses, you won't be too surprised to know we'll go in admin. So 109. And the same then for distribution. They're going straight into distribution. So the distribution is 444. Insurance. Now, insurance will be an expense. Now, it'll be a selling. It's not a selling expense, selling and distribution. So that makes it administration. So administration is anything to do with running your office or running your business. So that excludes anything to do with selling. So our insurance is an expense, and we could put that in 8,000 in that little part of our jigsaw. Bad debts. Now, bad debts we know are an expense from other questions. So again, a bad debt will be a selling expense. So we put that in selling and distribution. So bad debts are 2500. Purchases, again, cost of sales, opening stock plus purchases. So 1650. And sales is just another name for turnover. So we're going to put in our sales of 2730. If there is returns on the sales, we would take it away there. So in some more recent questions, particularly in mocks, there has been sales returns, so we just have to be aware of that and check, and we can know that if sales returns come, we can just adjust that figure. So rental income, well, it has to be income, so there's only one really type of income, so other operating income. So we'll throw that straight in for 50,000. Now the profit of sale of land is 85,000. Now there's a spot in the question for profit on sale of fixed assets, so we'll just put that again straight in. It's not one that goes anywhere else. Dividends paid 27,000 again. There's a spot here. In older questions there was dividends proposed, but there hasn't been in quite a few years. So I leave it there, and if dividends proposed are needed, we'll put that in again at some stage. We'll put it in if we come across it. So we'll just be aware of that as we go. So next one then, bank 89,000. So a bank is a debit, so we can put it in straight into our answer. It's a current asset. VAT. Now VAT's a credit 5,000. So VAT is obviously you can either owe it or it's owed to you. So if VAT's a credit, it's taxation due. So we owe it. So we'll put that in over here. So the VAT is 5,000. Now if VAT was a debit, it would be that the revenue commissioners owe us money. We've bought more goods in the 2-month period where VAT is paid than we sold, and we're entitled to VAT back. So if VAT was debit, which it was in the 2020 question or 2021 question, VAT will go into debtors. But when VAT is a credit, it goes into taxation. We've our debentures 200,000, which as always go into our finance buy. Now we just make sure we have the years in, so it's 2028, and there's 6% debentures. So I'm going to put that number in, 200,000. And again, when we've debenture, we have debenture interest. So I'm going to work out that debenture interest. So it's 6% of 200,000, which would be 12,000. And again, we'll have a working on that. We've paid 9,000. So that means there's a due of 3,000. So the 12,000 itself can go straight into the answer as our interest payable. And the 3,000 is other creditors. So we owe that money. Okay, so we'll put that in. It's money that's owed. We know debenture interest due would normally go into creditors, amount falling due within 1 year. It's not trade creditors, it's not dividends due, it's not taxation due, so therefore it's other creditors. Profit and loss, 50,000. Again, that's your profit brought forward. It's a credit, so we know that's an earning. So we add that on. A debit, you would take it away. Nearly always credits in these questions. Investment income we've done. We've used that, 7,000. Now the two share capitals we know go and finance by. So in these questions, it's called up share capital or issued shares. You add the two together. So it's 550. So conceivably you could do working over there, but I tend not to. But I remember to add the two together. Provision for bad debts, like always, they go into debtors, but they reduce our debtors. So our bad debt provision is a minus. So we put that in as a minus 23,500. So we're on to debenture interest paid. We've dealt with that, and a discount 33,000 is other operating income. It's a credit, so we know from our Excel that I always use, liabilities and earnings. It's not a liability, so it has to be an earning. So the credit is other operating income, or the discount is other operating income. If it was a debit, it would be a selling expense. And there's nothing to say it can't be a debit, so just be aware of that. So that's everything from the from the top. So we go down onto our second page, and we do all of our workings. Now, as a general rule, all of these go in twice. So so they'll all go in once on each page. So we just need to be aware of that. So the closing stock 90,000. Well, closing stock goes in cost of sales on our first page. And we know it's opening stock plus purchases minus closing stock, so we'll take that away. So minus 90,000. And on our second page, closing stock is always in our current assets, so plus 90,000 down here. Okay. Next one, we have to work out the depreciation on the buildings, if there is any. So it says during the year, the land adjacent to the company's premises, which cost 165, was sold for 250. Now, that's already dealt with. The profit on the sale of it has been dealt with, and it says at the end of the year, the company revalued its buildings to 930. The company wished to reflect this valuation in this year's accounts, so we've dealt with that. So we just have to put in the increase. So if your buildings start at 250 and they're going up to, sorry, they started at 750, wasn't it? So they start at 750 and they're going up to 930. So we have to add in an extra 180 there. So in our revaluation reserve, we're going to put in 180,000, which is the revaluation surplus. Okay. So now normally the depreciation working comes first, but in this case it doesn't. So we'll come back to that in a little bit. So next one, provide for debenture interest due, we've done. Investment income due, we've done. Auditors' fees, we haven't done. So that's our next one. Um, so auditor's fees is an expense and it's administration. So the auditor's fees are 16,000. Okay, now we haven't paid them, so we're providing for them. Anytime you provide for something, you haven't paid it. So the auditor's fees have to go into other creditors. Um, so we're going to put that 16,000 into other creditors, and we're going to do the exact same thing for our next one. So our next one is director's fees. So the director's fees is 45,000. Okay, and that's an administration expense, but it hasn't been paid, so it also goes in our other creditors. Now, next job is included in distribution is 14,000 for commission earned. Now, there's a little. It's not that there's a little bit of work to this. There's just a little bit of understanding to this. Commission earned is an earning. So in the T account, expenses are debits and earnings are credits. So if you've put a credit in with a debit, you've actually reduced it. So they have taken 14,000 away from distribution expenses. So the distribution expenses are 14,000 too little. So we have to make them right. So we have to do that by adding it back on. So the commission received of 14,000 gets added on to get rid of it. So it should have gone in to other operating income. So we put it into our other operating income. So to take it out of distribution, we actually have to add it on, and then we add it on a second time to other operating income because that's the credit side. So that makes that right. Okay, so excuse me. So that brings us on to our depreciation. Now, it tells us that that we are depreciating our buildings. So depreciation is provided at buildings at the rate of 2% per annum straight line and is to be allocated 20% distribution, 20% or 20% distribution, 80% administration. So we'll deal with that part in a minute. So we have to depreciate really before we reevaluate here. So we have to find I'll just do it as a working, the depreciation on the buildings, which is 2% of the original figure. It's not the new figure. So it's 2% of 750,000, which is 15,000. Now, where would that go normally? Well, that would go into we would add it to our accumulated depreciation. But because we're revaluing, it would go into our accumulated depreciation, which would also go into our revaluation reserve. So this depreciation of buildings of 15,000 on the second page goes into our revaluation reserve. Now, it then gets split up, and it told us in the question that we need to split it up 20% distribution, 80% admin. So we need to follow that. So the depreciation of buildings will be 20% of 15,000, which is 3,000, and the remainder goes into admin. So the remaining 12,000 goes into admin. All right, so that's that dealt with. And then it tells us depreciation is provided on vehicles 20% per annum on a reducing balance basis. Now, if you do, in my class we don't, but if you do the depreciation question as the 60-mark question, you'll know what reducing balance basis means. It means you're depreciating the value rather than the cost each year. So the depreciation of vehicles will be 20% of the vehicles at cost minus the depreciation. So it's going to be 20% of 510 minus 204. So that'll be 20% of 306. Which is 61,200. Now, we're not revaluing vehicles or anything, so that 61,200 will go into our tangible fixed assets as a minus. So because it gets added on to the 204 that was already there, so the minus 204 minus another 61,200, that puts us right. Now, it doesn't tell us that it is being split up. So obviously our vehicles are to do with distributing our products. So the depreciation of vehicles will always go into distribution unless it tells you otherwise. Okay, so that's that dealt with. Now, the patent was acquired on the 1st of the 1st 2018, which is for 171,000. And it's been amortized over 9 years in equal installments. So 9 into 171 is really the sum we're doing here. So patents written off will be 171 divided by 9. Which is 19,000. So every year they go down by 19,000. So it should tell you where to put it. So it says the amortization is included in cost of sales. So instead of putting it in selling in distribution or administration, they're asking us to put it in cost of sales. So that's what we do with it. So that'll be patents written off, 19,000, and then our intangible fixed asset has to go down by 19,000. So that's our write-off, and we'll put in minus 19,000 there. Okay, so that's that dealt with. Now, last one. The company is being sued by a former employee who's claiming unfair dismissal. The former employee is seeking compensation for 72,000, which is 2 years' wages. The company's legal team have advised that all proper procedures were followed. In the course of the dismissal, it's unlikely that compensation will have to be paid to the former employee. The company's received an invoice for legal fees to the value of 9,000. Now, 72,000 is not likely to be successful. So what we do is we make a note in the accounts of this. So if we can see here in the question, there's a thing on contingent liabilities. So we're going to talk about that when we get to the notes, which I won't do in this video, but I'll do in a future video on contingent liabilities. If it was likely to be successful, it will go in administration. The 72,000 would go in administration and also other creditors. It is not likely to be successful, so it doesn't go in either, and we're going to make a note of it in the accounts. So the legal fees do have to go in. So the company's received an invoice for legal fees for 9,000. So they're going to be administration. So we're going to put in our legal fees here. They're an expense, 9,000, and we've received an invoice. And an invoice means we haven't paid. So we have to put into our other creditors our 9,000. So that's our question done, right? So we now just have to total up our expenses here and transfer those numbers over. So for our cost of sales, we've 1648. So I'm going to put in that minus 1648, and I'm going to do the sum immediately. So sales minus cost of sales, gross profit. Again, you don't have to do it immediately, and I have managed to add instead of subtract. So 1082 is our gross profit. Next one, our distribution is 5247, and I'll do our admin while I'm here. That's 199. So 5247 and 199. Again, I'll put them straight in as minuses. I'm not sure why some of these are popping up in red. It's an old skeleton of an old template I've been using. And my other operating income need to get added on. So I'll just I'll total those and we get 99.7. Okay, so my operating profit will be my cost of sale, or my gross profit minus my two expenses plus my other operating income. So that's 458,000. So I got that wrong somewhere. 524. So it's telling me I'm just having a quick check in American scheme here. 1082, 524, 700, 199, and minus. So that should be 97,000 of that wrong. Okay, so that gets me to 4553. So I can finish this out now. So I've got to add on my investment income. I've got to add on my exceptional item there, my profit on the sale of fixed assets, and I've got to take away my interest payable, and that will give me my profit on my ordinary activities. Now, there's no way around this. You just have to learn off this skeleton to get this right. Now, corporation tax. There's normally corporation tax in these questions, and I'm not sure. Did I miss the corporation tax? Oh, it's there. 99,000. I skipped over it. Sorry. So the 99,000 gets taken away, and of course that 99,000 also has to go in our taxation. Now I missed that, but I would have got it when you're expecting to see corporation tax. So you'd if you've missed out on something like that, you'll get it in. So again, we take our corporation tax away, and we're getting our profit of ordinary activities after taxation. So the 437,550. Take away our dividends paid, and that'll give you a retained profit. There was no dividends proposed. Add on your profit from last year, your profit carried forward, and that gives you your profit carried forward at the end of the year. So the 460,550. So we can move on. Our tangible fixed assets, we can total those, and we get 117,400. Okay, our intangible will be the 95 minus 19, which is 76. Again, I've no idea why that's so far away. So we'll get that in and add the three of them together. That's your total fixed assets. Okay, we'll add our debtors, remembering that our BDP is a minus. We get 268, 750. So now I've got my three. Current assets. So I'll add those together. I have to do my current liabilities. I have no dividends due, and I've got taxation due, which I need to add together. So 104,000. And I've got my other creditors, which add up to 73,000. So I'll just put those in. Okay, add those four together. Now it just follows a normal balance sheet. So you're adding up your current liabilities. We're taking away them from our current assets to get our working capital. Really important you call it working capital. In this case I have a minus. And then because it's a minus, we're going to take it away from our total fixed assets, and that gives us our total net assets of 146,550. Okay, and we call that total assets less current liabilities. Again, it's important you name it that. Okay, our revaluation reserves are our last one, and that's 255. And then finally, our profit brought forward is 1,550,800, our answer from our first page. Add those three together, and that'll give you your capital. And then to that, you must add your debentures. And with any luck, I've got it right, which I don't. So I probably put in an extra zero along the way there somewhere. 182.5. Yeah, I've put in an extra zero in the revaluation reserve, and I've put in 155,800. I took the wrong number. Sorry, from there I should have. I needed to take the 460,550. Just rushing that. So now it balances. Okay, that's our capital employed. Now, that's part A done. That's worth about 66 to 70% of the question. Obviously, you've got these 10 marks going for a little bit of theory at the end, which I'm sure we'll explain a little bit closer to the date, or your own teachers will explain. You do have these workings, so which take up a few of the marks. So you have your accounting policy on tangible fixed assets and stock. You could ask that every question. You have your operating profit. You could ask that every question. And you have your tangible fixed assets, and you could ask that every question. Then you have a few more you can be asked, like dividends and contingent liabilities. My advice for you for those, maybe with the exception of the tangible fixed assets, is that you just learn them off from the marking scheme. So for tangible fixed assets, it's always the same. You're saying what's happened to the buildings and then what the depreciation policy is. So for tangible fixed assets, the buildings were revalued at the end of the year and they're included in the books at their revalued amount. And then depreciation is calculated in order to write off the value or cost of tangible fixed assets over their estimated useful economic life as follows. And you say what the depreciations are. So this one, buildings, was 2% straight line. Delivery vans were 20%, and they were on a reducing balance basis. And then for stock, it's always the same. Stock are valued on a first in, first out basis at the lower of cost or net realisable value. For operating profit, the note is just what is included in operating profit. That is not distribution or administration. So you say the operating profit was arrived at after depreciation, because there's depreciation in both of these, patents written off, director's fees, auditor's fees, and legal fees. So the things that wouldn't ordinarily be selling in distribution. So you don't have to mention there's bad debts, you don't have to mention there's distribution, and you don't have to mention there's commission. You don't have to mention over here administration or insurance, but you do have to say the profit was arrived at after depreciation, and you total the depreciation. So it's the two numbers together. So the depreciation of intangible fixed assets was, it's easier to work it out from down here, 61,200 and then another 15, so 76,200. The amortization was 19,000, so you label that, and then you say what the auditor's fees, director's fees, and legal fees were as well. So that's all we have to do for that. And I said you can have a look yourselves at the tangible fixed assets working from. Actually, I might do it. I'll do the tangible fixed assets one because there's a bit to that. So what we do, we look at our cost at the start of the year for the fixed assets. We look at any addition or disposal. So there's no real additions in these. And then we look at any revaluation surplus. So, and that will give you your cost at the end of the year. So the cost at the start of the year, we'll come back to, you're doing this for land and buildings. You're doing it for vans, and then you're supposed to total them. So it's easy look at vans, right? Nothing has happened vans at the start of the year, so they cost 510,000. Okay, so we put that number in 510. Okay, you didn't dispose of any, you didn't buy any, you didn't revalue, so their cost at the end of the year is 510. It's not necessarily the same for buildings. So buildings are 750, but if we go down and look at the working, that's not their cost at the start of the year. So we know their cost at the end of the year is 930 because that's what they've got in the accounts as. Their cost at the start of the year, you've sold land which had cost 165. So 165 needs to get added on to the original 750. So 165 plus 750 will give us 915. So we have disposed of, that's what we've gotten rid of, 165. That brings you down to 750. Okay, so 915 minus 165 gets you down to 750, and you have to think the opposite way. How do I get from 750 up to 915 when you're adding on the disposal of 165? So now we've got 750 and we have to get up to 830. So how do we do that? 750 plus 180 brings you up to the 830. All right, and we know that 180 is, we know that from our revaluation reserve anyway. It's this revaluation surplus of 180 here. Okay, so you total them over. All right, and then we do the exact same thing for the depreciation. So we've accumulated depreciation on the 1st of the 1st. We've our charge for the year. And then we've our revaluation surplus. So now in the marking schemes, you should see that they've skipped a line. And that's basically under their total depreciation. So again, easy for the buildings. Or for the vans. Sorry, vans, the depreciation started off at 204. The charge for the year was this one here, 61.2. So we put that in. There was no movement to revaluation because they don't revalue, right? So it's 265,200. So your depreciation at the end of the year is 265,200. Okay, your accumulated depreciation for land and buildings started off as 60,000. The charge for the year we worked out to be 15,000, and then we got rid of all of that, and we put that into our revaluation reserve. So our depreciation on buildings at the end of the year is 0. Okay, and again, total those across. Okay, so then last job, we have to do our values. And that's really easy. It's just your cost at the start minus your accumulated depreciation at the start. So 915 minus 60. And then for the second one, it's your cost at the end. So 930 minus 0. For here, cost at the start, 510 minus 204. And then 510, cost at the end, minus 2652. Then total those, or you can do the same sort of process. Sorry. And that's that finished. Okay. So your final part is to write your note on dividends. So your dividends note is what dividends have you paid, right? So again, I'll do this here. Sure, it's as easy to do it now as in a separate one. So we can look at our dividends, and the dividends that we paid were here somewhere, 27,000. So how much for this preference? Well, we know the preference are 4%. It's for 4 cents per share. So if we work out that 4% of 250, that's 10,000. So we've paid 10,000 in preference shares. The total amount is 27. So the ordinary dividends must be 17, right? Now, how much is that per share? We have to work out how much that is per share. So we take the 17,000. We're going to divide that by the number of ordinary shares, which is 300,000. And that gives you 5.6 cents per share. Okay, that's all we do for dividends. And as I said, on the contingent liability, you need to explain that there is a contingent liability in this question. And all you do is rewrite out this. So the company is sued by a former employee who is claiming unfair dismissal and is seeking compensation of 72,000, which is 2 years' wages. The company's legal team has advised that all proper procedures were followed in the course of the dismissal. It is unlikely the compensation will have to be paid. So you just write that out, and that's all for the contingent liability. So hopefully that's of some use for you. Any problems, you can comment or let me know.